This is how you can get tax-free money or an infinite return. Now, DSCR loans. DSCR stands for Debt Service Coverage Ratio. These loans have been extremely popular the last 7-8 years. You can literally grow your whole rental portfolio off of these loans. Now, for example, let's say you went to the normal bank and you wanted to do some investment loans in your personal name. Well, in your personal name, you're only allowed 10 properties, okay? That's it, 10 properties. With a DSCR loan, you're allowed how many properties you want, as long as they cash flow. Sounds good, right? Recently, I had a situation where my local bank called me and said, hey, Nasser, your loan is due this month. And I was like, man, is that this month? Hey, can I have an extension? I'm going to move the debt. Now, for those who don't know, when you get a loan with the local bank, it's normally due. Due means that you have to pay it off or refinance with them. And it's normally due 5 years, 7 years. Some may do 10 years, some, okay? And with the local banks, they put them on a 15-year amortization schedule or a 20-year. I've heard stories of people getting a 25-year with some local banks. Now, with your amortization schedule, what that means is, let's say you get a house in your personal name. You have 30 years to pay it off. Well, what the local bank will do is they'll say, hey, we're going to base your payments off of a 15-year schedule, as if you're paying it off in 15 years, but your loan is due in 5 years. Okay? So that was my case with this property. So I'm like, all right, cool. They granted me the extension, and for them granted me the extension, I was able to contact Kiabi. And I've been using Kiabi for years. They make it so easy to deal with because all you have to do is log into your portal. And once you log into your portal, you put the address to the property, you put your attorney or title company that you're using to close the deal, and you put your insurance broker in there. And from there, once everything is complete, you pay for your appraisal. Now, I want to say in this case, being that it was a triplex, the appraisal was $750, I believe. It was somewhere around there. I know it was, around that number. But anyway, it was like $750 for the appraisal. And once you put everything in, they give you a closing date. And normally, whoever's handling your account, you'll have a text message from them. So you can text them or you can call them. And texting for me is a lot easier, especially during my day. So they make it easy to do business with. And you can, talk to the attorney, line up getting everything so that the closing can be smooth. So I probably owed about $130 on the property, $130, $135, somewhere around that. And I told them, hey, listen, I want to take out $160. All I need is $160 because I wanted to keep the debt low on this particular property. Well, the appraisal came back at $444,000. That's correct, $444,000. They were willing to give me up to like mid 300s on something on the loan, like mid 300s, but I didn't want that much, especially with interest rates being so high. So I'm like, nah, I don't need all that money. I'll just take $160,000. Now, the only thing you pay for out of pocket is your appraisal. Everything else, all your other fees, they come out of the money you get back. So we got everything to closing, and from us getting everything to closing, I walked away with $19,000. Now, let's look at the original numbers on this, right? The original numbers, I paid $140 for the property, paid $20,000 to fix it up, and then I rented it out over the last 5 years. I rented it out. I think I had it longer than that. So let's say over like the last 6 years or so, I got back my initial investment that I put in there. Now, I literally don't have any money in the deal. And I'm just getting an infinity return, right? Because I don't have any money in the deal. You know what I'm saying? So, and the property cash flow is about $3,000 a month in an area that's consistently appreciating because just more things are coming to that area, you know. And for a triplex in Charlotte, North Carolina, I'm gonna be real with you, 444 is cheap, all right? And I know this is a hood area of Charlotte, all right? So therefore, but I just knew I bought right and I knew what was going to eventually happen to the area. So that's one of the reasons why I wanted it. And back to Kiavi, like they make it so easy to do this. Now, when you go to a local bank, you have to show tax returns and everything else. Kiavi, they are based on the deal. They do require a minimum credit score of about 640, I believe, but you want to go ahead and confirm that with them. And once you're pre-approved, if you need a proof of funds letter, guess what? They'll give it to you, no problem. So you can start putting offers in. So let's say you see a fixer-upper, they will give you the money to close on it and fix it up. And then once they give you the money to close on it and fix it up, then what you can do next is you can put a renter in the property. Now, once you put a renter in the property, you can call them back and say, hey, listen, I want to refinance into a 30-year loan. And then they will give you a 30-year loan. The plus about a 30-year loan is your payments are stretched out over 30 years. So your payment is low and then your cash flow is up here. So therefore, you get that difference. All right. So if you're interested in getting pre-approved with Kiavi, check out the pinned comment. I'm going to put my affiliate link there. I strongly recommend you getting pre-approved with them. So that way, when you go get the deal, all right, now that you get the deal, well, you're ready to pull the trigger because financing is already in place. Hey, listen, guys, now check out the video next to me, more on DSCR loans, and he gives money to first-time flippers. I'm Nasser, aka the real estate guru. I'm not a guru, I'm a duru because I actually do this business. Peace.